Hey everyone, welcome in to another daily editorial here on the KE Report. We're going to focus more on the precious metals, even more on the precious metals stocks here as I am chatting with Jordan Roy-Byrne. Jordan, let's start off with GDX because, hey, well covered on our show, especially that breakout at the tail end of last week. Above that, let's just round it off to 32 level. GDX is pulling back a little bit today, but it's still right around 33 as we're recording this. The exact price right now, 32.94. So holding above that level, I think one could try to make the argument that it's just setting up another higher base to launch from next, but it still might be a little too early to call that. What's your thought on the recent trading action in GDX?
Well, I mean, we closed last week at a new breakout, fresh new breakout. It was about a 9 or 10% higher in terms of the daily and the weekly close above the previous closing high over the past 7 years. I mean, that's a clear breakout. Oftentimes, you can snap back and retest support. Like my very short-term thinking is we could see gold GDX go up to about 36.66 or so. That's kind of the next resistance point if we're going back 7 or 8 years or so. So that's a short-term upside. However, we could see gold snap back, and who knows, today's weakness could be the beginning of a snapback where it does a retest of 31, 32. There is a gap that I think goes to 30.70. I mean, there's two gaps. It looks like it's trying to fill the first gap, but there's another gap that goes all the way down to 30.70. So if we see some weakness in the market, that's what I would be looking for. But I mean, if we come down and fill that gap, I mean, you want to be a buyer there. If we pop higher in the next couple of days after the Fed, we pop higher to 36.66. Then at that point, we probably would be very, very overbought in the short term. My short-term breadth indicators as of 2 days ago, I mean, if we're looking at for the Huey and GDXJ, if we're looking at the percentage of stocks that closed above the 20 and 50-day moving average, I mean, it's basically around 90%. So any additional strength from here, that would probably set us up for a little correction. So whether we correct from, 36 down to 32 or 33, or from here we correct, down to 31 or so, I don't know, but that's how I'm looking at the short term.
So what about the balance, too, of GDXJ actually not down nearly as much today as GDX is down, let's call it 2.5%. GDXJ is only down a little bit more than 1%. And SIL, so that's the ETF that has the silver stock, silver miners in it, that's actually slightly up today. See any significance there of juniors and silver stocks outperforming the larger gold stocks?
I think it's a function of the fact that GDX and the seniors have just been extremely strong off the bottom. I mean, I think on this leg higher, since the bottom, I think they've even outperformed GDXJ and SIL, which is unusual because usually, off of any bottom and you look at how much it moved, silver and the juniors are probably going to outperform. Of course, I mean, we're only looking at a month or 6 or 7 weeks or so. So that could change if the rally continues. But I just think it's a function, Corey, of the fact that GDX and the seniors have been so much stronger than the rest of the sector, and that in the inflows of big money, where does it go first? Big generalist money, it's going to go into GDX and the senior miners. Newmont, Barrick, the royalty companies. It's not going into GDXJ and the juniors. Eventually, it will go into GDXJ and the juniors. And then there's also which I talk about, the inflation expectations angle, which this has been an economic weakness, rate cut type of move. If we see some stabilization in the economy, and then we see inflation expectations confirm a bottom and start to trend higher, that's when you could see GDXJ and SIL really outperform GDX. But here and now for today, I just think it's a function of GDX being so much stronger recently.
So one other thing to consider, and it's been happening, I guess, more this week. You can maybe even argue last week it started to pick up, is that some of these other juniors that were not getting a buy, their share price has started to tick up. You and I were talking off mic about maybe some of the more marginal deposits and some of these lower quality juniors. Money's starting to filter down into those. We're not quite at the time where it's a rising tide lifting all ships, but some of these ships are starting to get at least a little bit of water under them. What do you think about this environment? Some of that money filtering down into these smaller, more unloved juniors.
Well, if you're a buyer right now, you're looking for if you've already or if you're already fully loaded in your favorite companies and you just want to add something, what are you going to do? You're going to look for, and if you're someone who plays the sector like you or I, you're going to look for, what are the companies on my list that I like that haven't moved yet? Maybe they have a few flaws, but if the market is red hot, these stocks could, um, they could see some inflows. And I did buy one of those this morning. I put out a flash update last night. So yeah, I mean, those types of stocks, they are going to start to see inflows if the sector remains really strong. And so the things that I would look for, Corey, to keep in mind are, I think we've talked about this before because people have been wondering, like, when are we going to get a real junior bull market? When is every junior going to start going up? Well, I think one piece to that puzzle is GDX breaking out over the 2016 high. The next two things I think we need to see are GDXJ. If that can break above its 2016 high, and then we see gold break above 1900 and make a new all-time high, I think when those things happen, then you could see some real momentum and real speculation in the sector. And I don't even think we have to wait until that point to see these lower quality, optionality plays or lower quality explorers perform better. I just think that if and when we see those things happen, over the months ahead, Corey, that's what could trigger some real serious speculation and momentum in the sector. So those names starting to do a little well. I mean, it reflects perhaps, what could be coming later on, and just the fact that the seniors have done so well, and the higher quality juniors and mid tiers. I mean, those have done extremely well also.
Yeah, that is true. And hey, some of these maybe lower quality companies, there is a reason to think that they could play some catch up. But again, we'll need to watch and see how this money is flowing into the sector. One other consideration for some of these moves in these smaller stocks is it is coming in generally smaller volume. Any thoughts on still the lack of any major volume? Could be a good thing that there are less sellers out there, but we're not seeing spikes in volume.
Yeah, I'm kind of stumped on that. It's a good point. Some technical analysts they're big on volume. I think most are not. They're more they focus primarily on price, and I tend to lean more in that camp. Focus more so on price than volume. I think volume, looking at individual stocks, it can be more helpful. But honestly, Corey, I'm kind of stumped. But when you look at the great move the stock market had from '09 to 17, that the volume was not particularly strong, and there were perma bears and the like were saying oh, this can't keep going on. I mean, the volume is so low. So I mean, it's kind of a concern. But look, Corey, you get bull markets, you get big runs. There's always a wall of worry. There's always reasons not to buy. And I would just put the low volume in that camp as one of the reasons not to buy or one of the reasons to be concerned. I'm not concerned with that. I would be, my concern would not be the low volume. It would just be, we've had a serious rebound and we're getting close to extreme overbought in the short term. So that would be my short-term concern, and are we going to continue? Question is, are we going to continue to follow the the 2016 and 2001 path of the rebound when this thing just surged for 6 months with barely any correction, or are we going to follow the 2008 like correction path where, I mean, there's a few 15%, 17%, 12, 13% pullbacks in there. So I'm not really sure, but it's possible that GDX and the rest of the sector could be starting one of those pullbacks here. But look, it's also the other line is also possible where we're just going to keep moving higher, and maybe we'll correct at a higher price. So that's where it is, and I'm not concerned about the volume really either way.
Yeah, fair enough. And hey, either way, with GDX breaking out, even if it does go through a little bit of a correction, that is then correcting at a higher price. So that is nice. Just as a final comment, though, I have heard a number of gold commentators, the more bullish ones, say that that recent washout just about 2 months ago, that did clear out a lot of those weak hands in the sector, and that's why there's just no more sellers left. I have heard that argument time and time again, but does it carry any more weight for you because of the fact that we saw such a quick pullback in pretty much every sector and now bounce back in gold, especially gold stocks outperforming U.S. markets?
Yeah, I mean, as to all the weak hands being out, I think there's merit to that, and I mean that's reflected by how strong this move has been. That we saw the seniors literally in a month were able to rally back and make a new high, and then GDX in a little bit more than a month. I mean, that basically reflects your question and reflects what some other gold bulls have said. So it's very interesting, and maybe it also reflects the fact that we've had this huge run and volume's been low, so there's been so few sellers on this move. I mean, at some point we'll run into some selling, but I mean, we'll see, Corey. It's been an amazing run that's taken many by surprise, including me, and we'll see how things play out over the short and medium term. But look, I mean, like I said, there's a historical precedent for the market continuing to move higher without much of a correction along the way. So whether we go that way or we correct here, a little bit more than expected, that doesn't really concern me. I mean, the key is the primary trends are all higher. And, eventually when we start to see the economy bottom out, inflation expectations turn around, then we'll see silver and the juniors, I think, really, really ramp up, but we're not quite at that point yet.
Okay. Well, either way, I think this is a very encouraging environment for the precious metals stocks. And when you do have something like GDX breaking to a level not seen in 7 years, that is take home, I think, as long as, of course, it doesn't crash from there. But hey, we'll see how the end of this week looks. And hey, even more importantly, the end of this month, which we only have about day and a half of trading left. Jordan, thanks for your time today. I look forward to chatting with you next week. I will post a link below to your website so everyone can follow along with what your technicals are telling you about the metals market and the stocks you are following. Thanks for your time today, Jordan.